Hey everybody, it's time for my quarterly personal finance update. Actually, this is my first ever finance update. The last one I did was just an overview for the year ending 2025 and what things looked like for me as I went into my first month of early retirement, how my portfolio ended, and what my plans were moving forward. But I am coming to you from very, very rural Laos. I am sitting in an open air house, basically, in the corner of a very small town. There's no reason anybody would ever want to come here unless you have family. There's nothing here. So we're going to be here for about 2 weeks. So I need to shoot this video, and I want to do it now. You might hear noises outside. This just gives you a view of my view. We're right on the corner of a very busy intersection in a small town outside of a city in the deep south of Laos. So you'll have motorbikes running by, old trucks, and some strange looking vehicles that they use for farming. So that might interfere with some of the sound here, but I wanted to give this update before too much time passes. We're already at the end of the first week in April, and this has been a very important month. So this is a personal finance update. I will talk about my portfolio performance. Spoiler alert, as of year-to-date, end of March, it was down 14%. Overall total portfolio, but I'll show you that a little later. So this isn't just about the numbers, this is about my personal finance. So this is decision making, this is things that I did in the first quarter, and this is things that I need to do moving forward within the context that I'm in. So I ended the quarter with a negative 14% overall in my portfolio. It was very uncomfortable to walk through, especially when I'm in my first quarter of early retirement. And honestly, this is the journey in real time, because markets don't go up in straight lines. I had a feeling something was going to be coming because we've been on a rocket ship for the past 3 years, but the market has been pulling back in the last several months, even before the end of the year. But in these updates, I'll share the percentages, my strategy, and my mindset. And because this series isn't about flexing numbers, it's just showing you what early retirement could look like and looks like for me in real time. And this is when the markets don't cooperate. This quarter has made me sweat. I'll be honest with you there. I'll share this for anyone that's new here. In my situation, I did not ride off into the sunset into financial independence, retire early, the FIRE movement. I didn't ride off into the sunset. I was basically forced into retirement last year. At the end of last year, when I lost my job, I found out for sure by mid-year that I was going to be losing my job. And frankly, the prospects for my kind of work in this country, in this region, it's very slim pickings, especially for someone like me. I've been working in the humanitarian world for 30 some years in finance and administration and strategy, but I was happy to leave the job. I just wasn't happy to go into early retirement yet. I still feel like I've got a couple years left in me to potentially work. I loved what I did. I was part of teams that helped millions and millions and millions of people in very bad situations, and that part really meant a lot to me. I love the technical side, and I love the missions of most of the organizations I worked for. But the leadership in my last job just went to pot, and I was fed up with it. It was incompetence, lack of budgeting to have the systems that we really needed to operate well. And I was on 24/7. There was no break for 8 years. And I just couldn't, and it was really the leadership. I worked with the leadership the first 6 years, very good. But this last 2 years went to total shit, I'll be honest with you. I was happy to leave that particular job. I just wasn't happy about going into unemployment, and just being in the office all day, knowing I was missing life. I'm 56 years old, and just sitting in an office dealing with BS, just having to report to someone all the time. Someone owns your schedule, and I just felt I was going to start to miss life while I was younger and I still had my health. I'll be 57 this year. I'm married to a Lao woman, and we left Thailand and we moved back to Lao 3 months ago, back in December. So some of the decisions and big financial aspects that I had this year, so far this quarter, was I had two financial plan reviews. One was of my profile in the Bolden software that I've started using a little over a year ago. If you're not familiar with it, I recommend that you look into it. But I paid $250 and I did a review of that consultant, who basically went in to look at my profile and all my numbers to find out if there were any errors or anything that didn't look correct. I did a review on that, and then the second consultant that I hired was actually to help me build a financial plan. This cost me $3,000. Bolden does offer this, but I already hired the other group before I did, and this other group did a brief review of my situation a year ago, and then I just thought it might be better for consistency to use the same group, and knowing that they wouldn't be trying to upsell me into anything. And I'm going to do a review of their recommendations and whether I liked it or not. Spoiler alert, I'm kind of 60 to 75% happy with it, but I'll do a much better review of that. It was helpful in some ways. Some ways it was predictable, but for my particular situation, I think it was a lot of money for. I'm a somewhat simple scenario here. I don't have a complicated situation. So some of the recommendations were what I expected, and some of them were I'm not so sure I agree with that. And a lot of it's around risk tolerance as well. In some ways, I was surprised at how high risk of some of the recommendations were, even though the group tends to be much more conservative, which you would probably expect from a consultant this early in early retirement. But another spoiler, the calculations is that I have roughly a 50% chance of succeeding in early retirement. 50% chance. Even Bolden success probability, according to their algorithms, also is currently putting me at a 50% probability of success, which also means 50% as probability of not succeeding. So my timeline is roughly 30 years to support me and my wife. It's a literal flip of the coin. I'm sure one or two more years of working would have put me in that more comfortable spot. It's better to go with a 75% rate of success, but I don't think I really have much of a choice. So it's a very sobering moment. I've got to try and manage what I have. So moving forward, the focus is going to try and be making smart decisions, being somewhat frugal, but not being stingy with ourselves. One of the more recent evidences was our spending this year is very high, our average. It's almost double, but that was expected because we had some one-off expenses that were very, very high. Most of that includes some upgrades to the house that we had to make. So I don't expect that we should need them moving forward. So hopefully our operating expenses will come down to a much more reasonable average. There's no wiggle room for error here. So let's talk about my portfolio. So I said at the beginning that I'm down 14% as of the end of March. We've had a bit of an uptick in recent changes with the crisis in the Middle East within the past week as of yesterday, but I'm not going to include that. I need to go on by the actual figures at the end of March. This has been exposed as my major weakness in my plan. I'm rather high risk. So last year I went into the year with a relatively high risk portfolio, a 7 to an 8 out of 10. And ideally, I should be down at a 5 out of 10, minimally, going into early retirement. But I didn't have much time to prepare. I ended the year with less than 1 year of cash reserves. Part of my plan this quarter, especially since with the consultant recommendation, is to build up my cash reserves to at least 3 years. And I'm thinking more like 2 to 3. I'm a little more comfortable with 2.5. I had to make some big decisions, and part of those decisions were I wasn't comfortable with less than a year and a half because less than a year of reserves. I think that it's too much risk. So I made the decision to cut some recent positions and stocks that I had that were relatively large. I took one position at a loss to offset some of the gains that I made earlier in the year with some stock sales. So that will benefit me, and it was enough to give me a couple more months of cash reserve. And then I sold another a smaller position at gains, so they kind of offset each other. So I was able to raise cash with just those two positions, enough to last me at least another up to a year. Ended the quarter with approximately almost a year and a half to 2 years worth of cash, as long as we bring my monthly averages down. So that was the big win, is raising the cash, give me a little bit of remove some of the anxiety about not having cash, because the biggest risk that I face is going into a sequence of returns risk where I am withdrawing from my portfolio the cash that I need to live on if the market's going down. And that's what will kill my portfolio. That will worsen my probability of success. And it's a risk, but I think it's a risk I need to take to keep my reserves where they are, and just hope that within the next year and a half, the market does do better, that the war that's currently going on does not continue. One of the recommendations from the advisor was to sell my crypto, to put that into cash. That is barely a gain on what I invested. I've not purchased crypto in probably 3 or 4 years. I was into that during the phony Roni period. I just stopped buying into that about 2 or 3 years ago, and I'm just going to hold what I have. But I didn't sell the crypto. I did run this by AI as well to see its recommendation. It is telling me there's no room for something that risky, that speculative in a retirement portfolio, especially a retirement portfolio that is a high risk, such as mine. But I do believe that that's going to recover, and I'm just holding off on cashing in on the crypto, because that's something that could skyrocket very quickly. And I'd rather wait. It might be a mistake. I don't know. We'll see. Right now, I'm holding it in bucket 2 and just adjusting the price as the price of Bitcoin and Ethereum fluctuate. I don't have any crazy altcoins. I have a few small positions. I know this adds risk, but I just want to talk about, be transparent about it. I've not held this much cash in a long time. But one of the temptations I have is buying the dip when the market's down. And it's been down multiple times. I mean, the market's down 12 to 15% since March. And it's really hard to hold on to the cash and not be tempted to buy into the dip. That's something I've been doing for several years now when I had a steady income. But it's a very hard discipline to not do that. And I've got to keep to my principles now, or I could really worsen my situation. If I buy the dip and the dip goes lower and we end up in a recession or a longer period of stagflation, where my portfolio stays down longer for a longer period of time until I need the cash. Another tax surprise this year was my accountant told me that I might have to pay more than at least $10,000 in taxes for last year. I was really shocked because, it doesn't make any sense. I pay full taxes on all my monies in Thailand, where I earned my income for the past 8 years. I pay full taxes. I mean, it's similar tax brackets as the US, so there shouldn't be any change there. I did get a severance payout at the end of the year, and that was fully taxed. I'm talking to her to see, you got to be missing something here. That just cannot be possible. I did make some gains last year, but I tracked my gains, my short-term and long-term capital gains. So I know roughly what I should be paying, and it should not be $10,000. If I do have to pay $10,000 in taxes to the US government last year, yeah, that will really hurt my cash reserves. So that's just a reminder that taxes don't magically disappear in early retirement. The uncomfortable part of this has been my quarterly spending was twice as much as it should be. It was planned. They were, except for one or two things, we are having to make repairs on the house periodically, but hopefully that will be passed. Speaking of, my wife just had an accident, a pretty serious accident. That was an unplanned expense for this month, which we will see in my April spending. I have to absolutely bring down that spending. It's twice of where it should be. But, it was mostly from those one-off expenses, especially in January. So I'm wondering if I should have removed those expenses because they weren't planned, but they were part of the January expenses. So in some senses, I'm not really worried about it. But our operating expenses, for the most part, aside from the one-offs, are roughly on target. I already decided to cut one of the investment groups that I belong to. That's about $900 a year. I would have been making that payment this month. So it made me a lot of money in the past 2 years that I belong to it. I regret moving it, but I just decided it doesn't make any sense anymore because I don't have an income. So I'm just going to cut that. I still belong to another group, but that was already paid in December. And the two groups are slightly different. One is just stock picking, and the other group is kind of a more investment mindset. We do discuss opportunities, but I'll decide later in the year if I want to keep that group, stay with that group. And I probably will for at least another year because it helps me see the opportunity right now and the trends and what to potentially do with the current investments that I have. I think we're still in a bull run on AI, and that's where most of my investments are. And I don't want to lose any opportunities there. So this year is really about tightening the ship, and I've got to reel in those expenses. So I'm going to quick show you what my portfolios look like since I did introduce them earlier at an earlier finance update. In my investment brokerages, in my overall brokerage, I am down 15.63% as of the end of March. My IRA is down 11%. So this shows you how risque some of these positions are. My Roth is down 13.72%. My speculative, and it's up 7.5%, but this is a very small amount of money, and it's very high spec, so a lot of volatility in the positions. I think there's about 10 positions in there. So that one actually is up, but it's too small of an amount to make a huge difference on overall portfolio. My cash position went up by 17.5%. This is because I closed some of my positions earlier in the year to raise cash, so I had some more cash for moving forward to give me a little more breathing room in case the market does stay down longer. So my total cash investments are down 11.5% as of the end of March. My crypto is down by 20% since that's usually much more volatile than most assets. And my assets, house and things like that, are 0%. I'm not going to update that quarterly. It doesn't make sense. So my total equity is down 9.39% as of the end of, and that's taking all my assets and into the total. That's an overview of my situation here in this quarter. So the plan moving forward is I'm going to look for opportunities to build up my cash. I've been chatting with AI just to get its feeling, and because I raised the cash that I did, it said hold off for, let's say, at least a year to a year and a half, assuming I bring down my expenses. So it said, for now, don't do anything. Don't cash in any more losses or while your portfolio is down the way it is. I'm just going to watch for any specific positions that might be doing well. I just have to be patient and reassess this in the next 6 to 8 months and just breathe. I hope you can hear me over the noise. I'm turning the financial plan into a calendar year, so with reminders, so I can be proactive about my decisions and things I need to review. And the other thing it will be, I'll do a video of the consultant recommendation and plan that they gave me to give you an overview of the type of things that he saw and the type of recommendations that he made, in case that you're interested. And I'm focusing on this year optimizing taxes and with a lower income. So that's my plan so far for the next quarter to a year. So this series is about showing what decision making and financial plan looks like. A financial plan of someone who doesn't basically has a 50% chance of success, and you get to follow along with me to see if you're watching a train wreck in slow motion. If the market goes up, I'll show you. If it goes down, I'll show you. If I make a mistake, I'll show you, because the goal here isn't about perfect returns. It's a plan that I'm going to have to follow in real life and real time and try to make work the best that I can. Thanks for joining me on this. I think I covered everything that I need to. Join me in the next quarterly report, and I will update you with how things are moving along. Thanks, everybody. Take care. God bless, and take it slow.